Guys, welcome to Crypto Insight. I've been a professional options trader for 20 years, and about a year ago, I switched my focus from equity options to crypto options. Why? Because of the huge volatility and opportunity in the space. Trading Bitcoin has allowed me to multiply my capital in a safe way. And in these videos, I will give you the benefit of my experience and insight into how I'm reading the crypto vol market and using options to either hedge or speculate on future expected moves in the crypto space. Don't forget to subscribe and like the video, and I hope you find this content useful. Thanks. All right, guys, so let's talk crypto. Bitcoin remained pretty heavy alongside other risk assets this week. So no major surprise there. The triangle that has been forming, if we look here, we're getting narrower and narrower range. That's what we call a triangle, broke to the downside. So we're expecting an exit one way or another of that triangle. And we got the exit to the downside, and we're retesting that kind of 29,000 support zone. Okay, which so far has held a couple of times. Now, there's been nothing too dramatic on the news front that's specifically bearish on Bitcoin. There's a few sort of headwinds that, stories that people have been mentioning, like the Grayscale BTC trust. The shares are unlocking throughout July. And so that's been arguably, bringing some supply to the market. There's also a large discount from NAV on where that trust trades. So if people there may be people who want to put money into Bitcoin and they're getting a bit of value doing it in GBTC rather than doing it in Bitcoin spot itself. So that could be directing capital away from Bitcoin spot. So there's an argument to say that until the NAV of that thing gets closer to fair value, then it's directing money away from Bitcoin and into that. So that's taking buyers away from the market at the margin, basically. Okay. Whether or not that's true, anyone's guess, but that is a narrative that's out there. Yeah. Also, if you look at some of the on-chain volumes and the new entities that are arriving in the space, those are significantly down from the highs. Yeah. So that's showing a lackluster demand and new adoption right now. Not as much new adoption as you would like to see, basically. Okay. But then this is natural in the face of a downtrend, right? We've been in a downtrend since April. The charts don't seem to suggest that's over yet. So you would expect the new entrants and everything, the hype to die down, and you'd expect to see that in volumes and stuff like that, which we are seeing. Yeah. What else? So talked about the premium. Exchange outflows. What have we seen? Exchange outflows suggest that coins are moving into stronger hands. Minor positioning. So, minor positioning has been in accumulation rather than selling. And you've got long-term holders of Bitcoin currently holding 75% of circulating supply, right? So that's a metric that Glassnode keep an eye on. And that would suggest a bit more of a bullish outlook going forward when that amount of strong hands are holding it, basically, right? So, the majority of people who are holding Bitcoin are basically long-term believers. They've held it for longer than 6 months. They're probably still in the money from purchases. They're not in a rush to puke it out because they have to take a loss, and they're not underwater. So there's less likely or less need for them to panic sell it if the market does break supports, basically, right? So that's the idea. This graphic, a nice graphic from Glassnode, right? That kind of shows you. So you got all these different color coding showing you the kind of length of time that people have been holding their coins, and you can see that in January we had that big spike. Yeah, so you have these kind of younger coins really spiking as people are piling in, and then that young coins has just been getting destroyed. So people who got in late to the party between, say, you know, October and January have been flushed out. And then people who have just been owning this stuff for ages are the larger part of the kind of base of people who own this stuff, right? So in theory, that's relatively kind of comforting to think that you're taking the weak hands away, yeah? All right, so that's kind of what the on-chain metrics are saying, the kind of fundamentals. If we then move over to look at vol, let's have a look at the vol. So what's been going on in vol? So we've had realized vol. Realized vol's not done a whole lot. So we've broken down to 29s. And you can see that realized vol, 7-day at least, is kind of hanging out around 40. Hasn't really done a lot. It's been quite an orderly move down. But then if you look at short-term implieds, I mean, July has gone from 69, 70-ish and spiked to around 90. So that's a 20-volt pop in July at the money. If we go to August, it's not going to be quite as dramatic, but it's gone from around 75 to around sort of 82. So that's popped by about 7 volts as well. So you're definitely seeing implied spike on the move down, but realize hasn't really done much so far. So what's that? People basically are worried, right? As we're approaching that support, despite the market on a realized basis not really justifying a move higher in vols, because the short gamma guys are able to hedge their book fine without really getting stung. There is like a feeling of fear that if we break levels, then vol's going to go higher, basically. Okay, and so that's why you've seen a pop in implied. You can see it nicely in the term structure. So if we look at the 1 week move in term structure, take away yesterday's move, then you know you can see a week ago it was very much in contango. You've had a proper pop in the front end, but then look what's going on in September, and longer maturities are actually shifting lower, right? So longer dated vols have come in by a few points. It's really the front that's caught a bid, as people are just a little bit worried that we might get an uptick in realize if we break this level, basically. Okay. And then what's going on in skew? Well, short dated skews should be no surprise. Short dated skews are kind of tracking that fear, and they're kind of grinding up a little bit, right? So if we look skew here. So nothing crazy, but you know, you had short dated skews kind of last week around 10 vols over for puts. They're kind of drifting higher to around 15 now. So put skew definitely finding a little bit of a bid as we're approaching those levels. Shouldn't really be a major surprise. Yeah, but it's not at nosebleed levels like you know, in the 25-30 zone, which it briefly did test. Yeah, it's certainly in the weekly stuff. And the monthly stuff hasn't gone anything like that. Yeah. Now, I do think there is a potential opportunity in skew, because if the market is to break, and I'm not saying this will happen, right? But if contingent on, if the market was to go and break the 28,000 area, then if we zone in on where the August optionality is trading, you can see the at the monies are at 80 right now. But those 20,000 strike options are 100. So that's 1 month volatility if we go to 20,000 being priced at 100. Now, I don't know about you, but I'm pretty confident that if we get down to 20,000, at the money 1 month is at 150 at least, not at 100, right? So for me, even though that skew looks like it's steep, it's not pricing in the right levels in my mind for where vol can go if we break. I don't think an orderly sell-off below 28,000 is what we get. I think we get a bit of a bit of an acceleration. It might be short-lived, but I think there might be a fair amount of panic from, you know, there are still some shorter-term hands there that will most likely be using that area as a stop zone. And with volumes declining and liquidity maybe declining a bit, that could create a bit of a panic sell-off if we were to break 28, right? So I just think vol struck way deep down is probably mispriced at the minute. I think that tail is probably a bit cheap, yeah? anyway, so that's kind of what I think on Bitcoin and Bitcoin Vol. If we look at Ethereum now, obviously we've been flagging Ethereum, been kind of using this spread as guidance. The Ethereum Bitcoin spread drifting back down. Big support remains at 0.055. We haven't really breached that yet. So nothing really new to report on that front. If Ethereum on its own kind of perched on quite a key support at 17 area, it's got another one down at 15.5. It's got another one at 13. So if Bitcoin was to break 28 and drop down into that 20,000 area, I mean, very realistic that we're going to see between 1,200 and 1,300 on Ethereum. That's kind of a coincidence. That's kind of like the relative level that you should expect to see if that level breaks. I'm not saying that's going to happen. If it does happen, I will be selling more put spreads. I don't think a move down in crypto into that region is going to be sustainable. I think it's going to be met with quite a dramatic bounce. And so I think selling put spreads is a way to kind of capture that. And you know, I'd probably sell September. I sold some August put spreads already last week, 1,600, 1,400, collected around $53, $54 to sell a 200-point wide spread. So for me, that's a risk reward I can kind of live with, given where the nature of that trade. If we were to break lower again, I would probably then put on another clip, but do it in September to buy myself time for that bounce to materialize, basically, right? So that's kind of how I'm doing it. I'm kind of sizing myself relatively conservatively to give myself bullets to kind of average in and do some new put spreads if we keep breaking down. And, you know, and then if I had a chance to roll my August short into September at sensible levels, then I would maybe look to do that as well in any reflexive bounces, basically, if we did start to break those lower levels. Yeah. So that's kind of my thoughts on Ethereum and Bitcoin. In terms of the spread, you know, a couple of things to note on Ethereum, right? So implied vol spread around 17 vols over. So Ethereum vol still holding up on a relative basis, kind of grinding its way as Bitcoin vol in kind of September drifts lower. Ethereum's holding the level. That spread's got to about 17 vol points now. And I think that I also saw a news story that might be providing a bit of bearishness on Ethereum about this update that we think maybe should be a positive for the store of value case on Ethereum, may be met with some negativity from the mining community. So the costs for the miners are going up, the revenues that they can generate are going down. Is that going to lead to some sort of backlash or some sort of revolt from the mining community in Ethereum? That's kind of the spook story out on Ethereum, basically, right? I don't know enough about that to speculate. I just think selling put spreads is a contained, safe way to buy the dip in Ethereum that we are currently experiencing. I think if the general macro asset landscape sells off, this stuff's not going to escape it. It's going to go down as well. And that's why I'm doing it via put spreads, so that I don't blow myself up in this kind of theta harvesting, premium collecting type game that I'm playing, basically, right? But at the minute, that's how I'm playing it. I've still got those call switches on Ethereum versus Bitcoin. They've been a bit of a scratch. Whatever I've lost in my Ethereum premium, I've made back in my Bitcoin premium. That was the whole point of the trade. Like I said, I was generally quite nervous of the macro landscape, which is why I did it as a call switch. That's worked out fine. At some point, the Bitcoin call is going to be worth next to zero, and I'm just going to buy them back and leave myself a free option on the Ethereum calls, basically, right? So we're getting relatively close to that happening. I mean, I'm kind of waiting because I think macro still sells off probably. So I'll literally be able to buy those calls back for next to nothing, and I'll have 1 to 2 month call options in Ethereum then that I didn't really have to pay for, basically. So that's kind of the game plan there for that call switch. Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. I'd also encourage you to sign up for a free trial to our live and interactive Macro Insight Zoom call. As part of our trading community, as well as the call, you'll also get access to our Telegram chat and our weekly market reports. To find out more, you can also connect with us on the socials. All the links are at our website, www.options-insight.com. Thanks. Bye.